Good morning, everyone. So I'll be moderating this panel, and we're going to do a quick round just to intro all the panelists. Eunice, you want to start?
Sure, yeah. I am Eunice Giarta, co-founder and GM of Monad Foundation. Monad Foundation is working to help accelerate and increase the awareness and adoption of the Monad blockchain. It's a new EVM high-performance blockchain that just launched just under 5 months ago at this point. So glad to be here.
Hi, good morning, everyone. Let me move this away a little bit. My name is Min. I lead global business development at Ondo Finance. Ondo Finance, it is the largest RWA platform. Currently, we manage around $3.5 billion in TVL. We have various assets that we have tokenized. We started with US Treasuries and money market funds. And as of 7 months ago, we launched on the global markets, which is the largest tokenized stocks and ETFs platform with around $800 million in TVL.
Great. Hi, everyone. I'm Michael, co-founder and CEO of Zero-G Labs. At Zero-G, we're building the blockchain for AI agents. Think full stack, not just a layer 1 blockchain, but also a compute network for inference and fine-tuning, storage, as well as data availability. There's also an AI safety layer and a bunch of other primitives necessary for agents to interact on chain. LLM models and so on, which we'll get into. But personal background is I started in tech at Microsoft and SAP, then worked for Bain and Bridgewater Associates, and then afterwards started a Y Combinator-backed unicorn company before starting Zero-G. Great to be here.
Hi, everyone. I'm Chen. I'm the CEO and Executive Director at Theoriq. So at Theoriq, we're building AI first or AI native DeFi infrastructure, starting by creating an alpha protocol, which is AI agent coordination layer. We also create in-house agent swarms, such as AlphaVault and AlphaVault Swarm, and also Gold Swarm, that are essentially the curators of our DeFi vault. So the last component of the stack is we are becoming one of the biggest curators in DeFi vault space, starting with launching AlphaVault ETH Vault, as well as Theoriq Gold. So most recently, Tether Gold has announced and publicly supported of Theoriq Gold as one of the best vaults out there, curating yield, on-chain yield for XAUT. So very, very excited to be here. My personal background, I spent a decade in financial institutions across Goldman Sachs and others. Started in crypto back in 2018 at Consensus, the Ethereum commercial company, and fast forward have led growth in various layer 1s, layer 2s, and now back in the Ethereum space, so to speak, and very excited to talk to all of you guys today about yield and institutional adoption.
Thank you. Before we start, I can give you a little bit of my background. So usually I am more on the technical side. I've been a developer, and I have been a DevRel engineer in crypto for many years. And right now I lead product at Lava Foundation for decentralized RPCs. All right, so the topic today is to define the next market leader. Before we dive into different narratives and verticals, it will be interesting to see a bit what the state of the current state of the market is. So what, basically, each of you in different state, but what is the current market right now telling you, or what is your opinion, at least, about the next potential leader in Web3? So whether it is on stablecoin side, agent sides, what do you think are the coming narratives that we should probably look into right now? Eunice, you can start, yes.
All right, I'll start. Well, I think that over the past several months for the 2026 conference circuit, there have been a few prevailing themes that I've been hearing a lot about, which is RWA. RWA in various facets. But it also makes sense in many ways because if we think about stablecoins as one of the prime examples of RWA, that ends up being a commonality for transactions on chain and facilitating whether it's payments infrastructure or a CDFI route, or even from an agentic perspective, needing to pay for computation or enacting on actions on behalf of the users that they have been deployed on behalf of. So yeah, I think that's like the big thing that I'm hearing, and not only that, but the new entrants to the market, like people who are asking questions right now are coming from a different audience set. Instead of those that are more crypto native, we're now hearing from financial institutions, from capital allocators who might not have actually been thinking about crypto up until recently. So it's an exciting time for sure. It's one of, in part, education and also foundation building.
Well, I am a little bit biased.
Yes, a little bit.
Since we are in the RWA sector, but absolutely, I think the RWA narrative is here. What we have seen essentially is a capital rotation, right? In this market cycle, given what is happening across the market and the macro environment, there is sort of like a shift in terms of flight for quality. And definitely we have seen that capital rotation across DeFi assets or sort of like tokens assets that are more crypto natives into stablecoins and stablecoins into RWAs. That's why we have seen a sort of like incremental adoption, exponential adoption in RWA products across tokenized stocks and ETFs, which we launched 7 months ago. So what we have definitely experienced is looking at, like people are now wanting to gain exposure in the traditional assets. What we have enabled is essentially you are able to say in the on-chain economy. So you not need to move your stablecoins off-chain, off-ramp into a brokerage account and invest into stocks. You can already do that directly. And what we have been able to do is integrate across all major exchanges as well as wallets and platforms to be able to offer that accessibility to the user. And I think access, like RWA at the moment, is more of an access play. A lot of the users right now are retail that are getting into the RWA sector. We haven't seen a real shift in terms of institutional buying tokenized equities, but I think that will come over time as the industry starts to build more utility around those stock tokens.
Yeah, very much aligned with these themes. And to me, it breaks down into institutional adoption on one hand, and then AI is the other hot topic on the other hand. And even on the AI side, we are seeing institutional adoption coming in as well. So for example, this week we announced a partnership with Alibaba, where we're the preferred partner for all of their QN models going forward in the Web3 space. And that basically highlights that other major institutions are very much interested in getting exposure to Web3 and even enabling AI agents to have trustless access and verifiable and private computation powers to be in Web3. And so these, to me, very aligned are the two trends that I've seen as well.
So I think what we're witnessing is a great decoupling because by and large, the retail interest has cooled quite a lot on DeFi deployment, and you can tell from the TVL, most recently the exit of 9 billion on just the Aave, right, in the wake of the hack. So, but at the same time, we're seeing the accelerating process of tokenization mainly led by the institutions. So there's the big contrast where the retail is too scared to deploy, but the institutions are ever so bullish about the RWA and tokenization as a whole. So right now, I just recently checked the number. We have about 28 billion worth of RWA assets on chain. But the sad fact is, out of the 28 billion, maybe just about 10 to 15% of the tokenized real-world assets are being curated, so it's like to generate yield. So that's basically a huge gap where, to me, it's a massive market opportunity and it's blue ocean opportunity where humans can come in to actually take the tokenized assets as an entrance point, but actually deploy it across DeFi protocols and make those assets actually productive. Because at the end of the day, the point of tokenization is making off-chain assets productive and more productive, right, on-chain. So the ones who can actually lead that wave of making them productive will obviously become the biggest winner. But we were still at the beginning of the race, so it's hard to say if the degens or the institutional incumbents will come in to claim that seed. And then also to touch on the AI point of it, because it's becoming very obvious that humans can't really handle the complex DeFi infrastructure or yield platforms so all by themselves. So that's where I think AI is being largely used at Theoriq and other curation teams as well, is that you have to involve AI every step of the way. Maybe not the ultimate decision making, but all the research, strategy, iteration, and opportunities discovery will need to be AI heavily involved in that process. So I think the space is very interesting. I'm very optimistic, but definitely it's a little bit frustrating seeing retail kind of taking a step back.
Yeah, so just to jump on this, because I think it's quite interesting to go into the AI crypto convergence at the moment, and we can go down to payment rails maybe a bit after. But so AI agent can right now basically make transaction. Like we are at the stage where they can manage wallet. There can be a lot of things happening. You two, more on the infrastructure layer, maybe more on the orchestration layer for you. Could you touch more specifically on those points? Like, so where does the user needs to even know what is happening? Like, should the user even care what is happening with the AI agent, or do you see the automation of all those financial infrastructure, their infrastructure today, being like the next, like literally the next step in the market?
I'm happy to start, and I think Michael should jump in right after. I think the beauty of AI agents in the mix of DeFi and the yield generation is that users can be relaxed, can step back and relax, and knowing that they are getting agentic alpha. Mm-hmm. Right, so that they're not only relying on a few people manually checking across platforms and generating return for them, but that there's a real decentralized AI intelligence involved in that. So I think that point is very important, very important to me and to users. I don't think users necessarily need to know the backend infrastructure or the making of the sausage, but I think they do want to get the convenience from the UI UX perspective. So with AI getting more involved in our day-to-day operations and life, I think the asset management, for instance, will change dramatically from you have to manually trust the one specific brokerage or advisor to manage your asset to it's going to be intent-driven mostly, right? So you will, for me personally, I've already been shifting from just chatting with AI for most of my work. And then the same thing, intent-driven will be kind of the go-to mental model for users.
I would say today you still need to care about what the agent does. So and the two things you need to care about are basically ownership and alignment. So who actually owns your agent? If it's an agent built on, let's say, OpenAI or Anthropic, they can change the terms and conditions at any point in time. And so the agent doesn't truly belong to you. And so Web3 has an answer to that. So we've developed a standard called ERC 7857, which we're also calling Agentic ID, where effectively if that token is in your wallet, you can actually fully own your agent. You don't have to worry about centralized control again. Now you could say, okay, well, I can run an OpenClaw agent on my Mac Mini and utilize that, but then how are you exposing your private keys? Then you have to worry about security. And what's the underlying LLM that you're still using for all of that? So it's still not to a point where you can just be like, okay, agent, you do everything in my life and I trust you completely. I don't have to have any control. So that's where the alignment point comes in as well. Alignment today in AI is primarily done kind of at the pre-training stage, usually utilizing a lot of reinforcement learning. But a lot of this alignment happens in a black box fashion. You have no idea where the data came from, what data is being used to train, what examples are being used to train, what the value systems are, where the data is stored, what version of the model you're even getting. You have no idea. You could be getting a quantized model when you're hitting the API. And so that alignment piece is quite important as well. And until we have something that's an alignment piece that's in production, so post-training, during inference time and so on, which we're doing a lot of research on, by the way. So we've recently published a paper called Sparse Inference Time Alignment, which does exactly that. where effectively the easiest way to think about it is if you're a parent. So I just came out of paternity leave. I have a 2-month-old daughter, so I think about parenthood a lot these days. So if you're a parent and your child starts to exhibit very high-risk behavior, what if you knew the exact times that that is happening and you could intervene as a parent and say, hey, if you drive that car very, very fast, you're probably going to crash. So why don't we, take a bit of a detour? And so that's effectively what that technology does. And so until things like these are in place, these safety guardrails, you can't fully trust your agent. And so that's from the infrastructure perspective.
Yeah. Do you want to jump on this, or it's less maybe on?
I mean, I think it's super interesting what is happening within the AI world, right? Yeah. A lot of speculations on AI, essentially, and sort of like the convergence between crypto is agents are going to be using crypto rails to do a lot of those transactions. And with RWA assets and stablecoins, right, for payments and so forth, so that they can do the transactions. But for RWAs, essentially, I think what could be cool in the future is that you have agentic AIs being able to build portfolios and automate trading strategies. And now that we're bringing these assets on chain, they have the option to be able to do that. We're looking at exploring, more into the AI space, actually, to sort of like how are you able to build a portfolio on chain effectively, and having the AI agents be able to do the research, do the rebalancing. I think there is a world where I guess investors may become a little bit lazier in a way, right? And then just rely on agents to be prompting. I don't think we're there yet in the AI life cycle that we are in, but I think we will get there at some point.
Maybe to add something to that too. So I've been speaking, one of our vault providers is RE7, and what he basically said, like AI agents are at a point where they can replace all the way up to a 5th-year analyst, but they can't replace a 6-year analyst because that person has a lot of edge case knowledge and a lot of expert knowledge to do that. So you can kind of see where the state is there. And then I'm also starting to see some agentic companies, let's say like Giarta or Theoriq, kind of build things that are pretty interesting, that are very difficult for humans to do, like looping strategies, for example, which is a pain in the ass to manage, but very lucrative. So if AI agents can actually do that with, within a specific risk parameter, that's pretty interesting.
So I have a question also for all of you regarding that. So we can start on the payment rails, but like just to jump on it, for instance, on the looping strategy, like let's say you have something like Morpho, they have curators so for each vault. Do you see, because it's a lot about the trust and the transparency as well that the AI is bringing, right? So on the infrastructure level, but also how people understand what the agent executes. What is the reaction of maybe more traditional player, like let's say for RWAs or for stablecoin? Like, are people, the investors and people using your platform, are they a bit reluctant to have this new, this new technology coming, or are they exciting? Where do they see the transparency and the trust being maybe a bit challenging? Like. How do you pitch it basically to people that are going to use your infrastructure or your platform?
So I probably will touch upon maybe a more existential thought here, which is that for traditional, more traditional opportunities, there's always someone who's responsible. At the end of the day, someone will, if there is a bank run, like maybe FDIC in the US will help backstop a little bit, or things like that. That doesn't necessarily exist in the decentralized world in crypto. And we're witnessing literally firsthand 2 recent exploits where this is becoming front and center. Like what happens when there is a depeg? What happens when there is an infinite mint possibility, or things along those lines? And I realize that some of the issues that that happened recently were maybe more of an OPSEC concern. Regardless, what happens in the market is a reflection of some of these open economic questions that we need to think about. So risk parameterization, or understanding how to quantify that risk and in some ways price that in, are certain strategies worth certain strategies that increase yield worth that extra boost in yield. And then also just asking the question of like what happens when things do go wrong. So part of it is probably preparation. Part of it is understanding where, let's say agents and the reputation, so to speak, can come from and be attributed to. And then part of it is also just understanding the dynamics of what it means to exist in a decentralized economy.
Yeah.
Yeah, I think from the RWA perspective, in terms of trust and transparency, what we have done at Ondo is sort of like not completely eliminate it, but ensure that from a product design standpoint, we create that level of trust and investor protection effectively, right? As we design our products in terms of how do we tokenize, how do we ensure that people understand whether the underlying is backed or not. So what we have done is created a legal structure. We have used the traditional legal structures constructs to be able to provide this to users to ensure that we tokenize all of our assets under an SPV. Essentially, that SPV it issues a debt notes. That debt notes is sort of like a senior secured claim, so token holders' rights are protected, right? From any bankruptcy remotes issues and so forth, right? I think it is the responsibility of the issuers to be able to create that trust with the users and token holders to be able to provide a product that it is well designed and that people are able to back it up and ensure that should anything go wrong, because there are a lot of possibilities in this industry that their assets are fully backed and protected. I think what Ondo Finance has effectively done in terms of this design and construct is eliminating this counterparting risk, so to speak, to ensure that people knows through the attestation that we publish on a daily basis that you have all the stocks that we have issued versus the amounts of tokens that we have on chain. So people are able to verify that, and that is not done by ourselves. It's done by a third-party collateral agents, third-party verification agents as well. So I think from the industry has evolved over the years, right, in the way that they create trust and they sort of like exhibit that across the space. And I think it is the responsibility of players like the issuers to be able to provide that to the token holders and issues.
Yeah, completely aligned. And maybe what I'll add to the discussion is that it's super early. Like there's more than 1,000 trillion worth of money in the world, if you include derivatives, real estate, oil, all of those types of things. And you said there's 26 billion, so that's a very infinitesimal small point. And so I think there's also some industry maturity that needs to happen. For example, I had a conversation with a market maker recently, and he was saying, well, would 10-10 have happened last year if we had a margin call option, for example? Should a wick like completely destroy a lot of traders? Like that's a TradFi concept that's been around for a long time. And if you have a huge balance sheet, maybe you have a $100 million balance sheet, and you have a small perps position, and then you get kind of wiped out, there's some maturity and some type of product discovery that can still happen in the industry as well. So it's early.
Yeah, I think what means that resonated a lot with me. I think I would agree that basically institutions haven't got that far to explore AI or agentic capabilities. I think the biggest concerns or the DD focus has been around the asset security. So a lot of questions that I got as a curation team is what's your cold storage solutions? What's your custody? Do you have insurance? And how long are you guys going to be around, right? Counterparty risk and sustainability or operational stability is super important for institutions to even begin the process of working with you. And I think that's where they are in terms of like on-chain participation. But the reason they're all kind of rushing into the tokenization space is because they're anticipating the future is where the off-chain assets will eventually all be on-chain. And it's important to prepare for that future. So better yet, like BlackRock would want all their ETFs and the products to be on chains through Ondo and other partners, securitized maybe, and then that's just to set up for what's to come. But they are not there yet in terms of exploring AI. I think if anything, they're very scared of their partners, DeFi partners, that are using AI very aggressively, because I think AI is still not. It's in the process of developing and becoming more mature. I think it's super fascinating to see how the open cloud community has developed and how aggressive and open as a whole the users and developers are using AI and agents to even like manage their money and capital on chain, right? And a lot of times they lose it. If you give your agents capital to deploy, and chances are in today's market, you're going to end up losing or generating negative yield. But it's the experimental spirit that will power us forward, right? Like you have to have this pioneering group of people, developers or users or capital allocators that are willing to have the risk-on approach in using AI and working, with newer protocols or blockchains to really lean in to experiment it, because those are the ones that made the billions of dollars back in 2020 and 2022 DeFi summer, right? So I think there will be the group of people that come in and really power it. That won't be the institutional group, but I think they are setting the stage to really becoming a participant when things are mature and steady enough. And also, I think KYC is super important. So like having the SPV set up and the offshore, sometimes offshore entities, and being able to have the proper capital syndication or formation, and also have the regulatory separation to make sure that the off-chain capital is back in the on-chain asset one-on-one, and having the auditing and all of that legal and compliance setup is something that they're working on.
Yeah, I think it's a very good transition for the next question, what you mentioned, because it's been in this current market, we've seen such an inflow of institutions that a lot of crypto native are thinking, that we are like shifting a little bit away for what it used to be a few years ago and so on. But I think what's interesting is more to ask, a bit like Stripe saying a few days ago at the RWA Summit, like they are building the AWS of, for money, basically. So they have Bridge, they have Tempo, they literally have the entire infra to run on their own. What I want to ask you is that, especially because Monad being very crypto native originally, how do you see this? Like, do you think it's really the TradFi player kind of coming and absorbing, like somehow, or buying, or whatever they are trying? But do you think it's more them doing it that way that is going to win? Basically, the next market leader are going to be those Web2, very powerful TradFi institution. They're just taking the payment rails from crypto and adapting it to their own market? Or do you still see a lot of value on what you say, like very innovative Web3 infrastructure? They're like pushing the boundaries, being a lot more leaning towards AI, like trying to innovate and so on. Where do you sit, like in this topic?
I don't think it's mutually exclusive.
Yeah.
So I definitely think that there's opportunities to explore both. And this might sound like a have your cake and eat it too kind of thing, but on the note of crypto and blockchain as a transformative technology, ultimately the vision that I have, and I think many of us in this room have, is that it ends up being the future state of computation. So whether that means that we know sometime in the future we no longer have the same experiential UX UI frictions that we do now, and maybe that's facilitated through agents. That can be a future picture. But the other thing too is we can learn a lot from what has worked really well in traditional industries, from traditional finance, and accelerate some of those positive efforts. I know that I mentioned payments a little bit earlier, but if we think about it's actually pretty amazing that we have a working global economy right now. It's not the most fast, sure, there's T+1, T+2, T+15, depending on exactly what remittance rail we're talking about here. But a global economy works. if we get to a point where many of those start shifting on chain, then we are able to reduce some of the intermediary frictions, and suddenly we'll see like global settlement that happens within seconds, minutes, hours. All of those things are improvements from what we see now.
Yeah.
So, I guess like to sum it up there, I do see a bit of a consolidation of, yes, the future can look different through new technologies that are currently being explored via AI, via increased use of blockchain, and then also accelerating the things that do work well right now.
Yeah, I think there's definitely the convergence between the TradFi and the DeFi markets, right? There's various proponents of both camps. There's the DeFi hardcores that are saying like, oh, we're gonna overtake TradFi and so forth, but I don't believe in that, right? We are still working very closely together with all of our TradFi partners. When you think about tokenizing an asset, you still need to have a hedging venue at the end of the day. You hedge in the TradFi markets, especially when it comes to stocks and ETFs as well. What we have done is built our product and systems to be able to plug into TradFi liquidity effectively. So we're not recreating a liquidity pool itself. So we're still very much dependent on TradFi rails to be able to enable this industry and bring things assets tokenized. Now, when we think about how the market evolves and how TradFi plays a role, they definitely play a very important role in terms of starting to catch this wave in terms of adoption on tokenization, because we do need them to sort of like understand the underlying technology. A lot of them are starting with funds and how do they tokenize funds and how do they distribute those funds on chain. A lot of that, they work with partners like us on the finance to sort of like help with distribution across a lot of their fund products. Or OUSG, which is a money market fund product, is underlying, it's like BlackRock's Bureau Fund, which is tokenized Fidelity's funds, Wisdom Street's, and so forth, right? So I do think that they continue to sort of like play a role in this industry, and I don't see that going away, even during like in payments rails. It is great that Stripe is coming in, and it is great that they are getting more people to issue stablecoins and so forth, because stablecoins effectively, it is kind of like the best entry into the on-chain economy. And the more people that gets on it, the better. Right now, we're talking about total tokenized stocks and ETFs, it's roughly crossed $1 billion in TVL. The total equities markets globally, we're talking about $128 trillion. So to think that we will be like overtaking that overnight, I think that is a little bit misguided. So it would take time for this industry to kind of like converge a little bit deeper. But I think with the institutions participating, testing the technology, and adopting it, that is what's going to lead this institutional shift over time.
I do want to clarify, I never said that blockchain technology would overtake traditional rails. I definitely agree with the fact that this is very much a partnership of sorts. It's a symbiotic relationship, and what blockchain can enable is just that enablement and accelerant as opposed to a replacement.
Yeah, although add to the discussion is that chains are effectively network businesses. So why is Ethereum still around even though it has many, many minutes of block finality and very low transactions per second? It's not great infrastructure from that perspective. It's because of network effects, community, liquidity network effects, application network effects, all of those types of things. So very similarly, I see this evolving in a similar way. You can look at other industries, for example, social networking. You've got WhatsApp, Viber, and Telegram, and Signal, and all of these have their own value proposition, but they're still around because they have their network effects. So very similarly, Stripe with Tempo, they have a large distribution channel. They have their own network effects this way. What remains to be seen is if they can actually take crypto native users onto their chain as well. So that's going to be interesting to put to the test.
Yeah, I think like it's well discussed already. But the way I look at the Stripe's launching Tempo and really focus on the machine payments, and I think it's meaningful because I think they've realized that they have to replace their settlement layer with blockchain technology, and ultimately that was the original promise, right? Is the immutable ledger and the better settlement layer, which coming from banking background, I fully understood and agreed with that. I think you'll see more and more of that kind of attempt, and which I think makes a lot of sense, is like the institutions that own the end users, the distribution channels, and also most importantly, the trust of their users are very qualified to come on and launch an infrastructure layer. But because of their revenue structure, it may just stop there because they have a lot of other business lines to take care of. That would give the DeFi degen and the DeFi native teams an opportunity to come in and build on top of it. And that's not also putting other native blockchains to the side. It's just like this is the playing ground, which is now you see institutional, but also native players both being there. But I think the talent and the expertise of navigating on-chain world still remain with probably the group coming from like early days of 2020 or even earlier, right? So I would say that the use cases on regardless of which chain will still probably be driven by those original groups. So I hope to see that where resources available and opportunities present themselves, I can see the institutional infrastructure and the DeFi layer players come together and build some really cool products.
If I can just add a little bit on that as well, right? I think Pei is right. Like when you look at institutions coming on chain, a lot of it is on a permission setting,
yes.
right? So when we're talking about DeFi users adoption, a lot of it is permissionless. So like, for example, our tokens are permissionless. So when you look at this convergence on institutions, they are testing on a permission chains. They are testing on sort of like whitelisted KYC addresses mainly. Whereas I don't think that shift has moved for it to be fully permissionless, for you to be able to use the token, give it utility, post it for collaterals, right? I don't think we're there yet, but I think from a utility standpoint, as the industry progresses and builds sort of like adjacent businesses and new businesses around products like tokenized stocks, we would start seeing a bigger unlock. And institutions will start to understand sort of like how do they design their products to be more kind of like permissionless, to be able to be freely utilized and freely transferable and so forth. But I think that's a process in which we're going to be crossing.
Yeah, we only have a couple of minutes. So you believe that most of the big, like traditional player would definitely look towards permissionless infra? Like it's something I always felt working with like Securitize or like all the big. They obviously have to KYC. They obviously are heavy on permission. They need to have control about where the liquidity goes. Like it's very important. So I always had this feeling that maybe decentralized and permissionless was never something they were exploring. But I could be, this is my opinion, maybe I'm completely wrong. So based on your experience, do you believe that going more towards permissionless payment is something that we're going to see happening?
I think permissionless is definitely where the growth of the DeFi industry will be. Institutions may not want that at this moment. A lot of the institutions focuses around compliance controls, who are the holders. Of course, you are able to program a lot of the things that they care about, like are these tokens held by a sanctioned entity or wallet and so forth. We do have a lot of tools within DeFi to be able to monitor that. As issuers, we do transaction monitoring on chain. We're able to program the tokens. We have the ability to freeze tokens as well, should it fall into a sanctioned wallet. So as an industry, we are evolving over time. I think there are still a long way for us to go to convince institutions that, yes, you're able to freely distribute your tokens in a permissionless format for you to be able to transfer freely across borders, across different users. I don't think we're there yet in terms of the technology that we have right now, but I think we will get there over time. This industry has evolved very quickly, right?
Yes.
5 years ago, we were not able to talk about tokenized securities. Today, we are sort of like being able to issue that across many wallets and exchange partners. That is not something that we could have done 5 years ago, right?
Yes, I agree.
I actually think the technology is here, but there's, of course, the other factors that are holding, or not holding us back per se, but definitely baby steps. Like, we are so early, and I think all of us kind of agree with this. So building an element of comfort and understanding of how to actually use something as like open and potentially scary as decentralized and permissionless tech is what we're all working towards in various capacities.
Yeah, for sure. All right, I think we are at the end of this panel. Thank you very much.